to special coverage of Global Fintech Fest Day 2. I'm Ankur Mishra. In next half an hour, we'll get you all the details that happens on the ground at GFF. And on Day 2 especially, the fintechs as well as banks did acknowledge that there is a growth in demand, but more importantly, the innovation is going to be the focus area of both banks as well as fintechs. But let's get started with the important comments which came in from Reserve Bank of India Governor. He did acknowledge the role of fintechs, but also mentioned that Reserve Bank of India is going to announce norms for digital onboarding.
The DPI underpins India's digital transformation over the last decade or so. It rests on three layers, as all of you are aware. Each layer has been playing a very critical role in addressing the barriers to inclusion and enabling innovation at scale. One, the identity layer, anchored by Aadhaar, with more than 1.4 billion enrollments, has made it possible to authenticate identity instantly. It has enabled millions, 560 million, to open bank accounts and participate in the formal financial system through the electronic KYC. It is the core of DBT for government benefits. Two, the payments layer, which translates identity into action, into transactions. The AEPS, Aadhaar-enabled payment system, has enabled banking through micro ATMs to the remotest corners of our country, through the business correspondents, through the bank sakhis and so on. Complementing these layers of the DPI, we have the vibrant fintech ecosystem, which we see over here present today. The foundation of DPI has allowed these fintechs to set up quickly and to scale rapidly and deliver targeted solutions to not only address current but also future challenges. Today, India is home to 10,000 plus fintechs, more than 40 billion US dollars of investments over the last decade, phenomenal growth.
It's not only in India, the global policy makers are acknowledging India, and they are saying that the digital transformation India has is something to be learned about. In fact, the Denmark central bank governor did acknowledge that he is going to take learnings from India.
It's also important to keep things in perspective. So, for instance, for the Danish economy, our estimates, in the short run, it reduces growth by 0.5%, which, of course, is a pity. But it's not, I mean, we can deal with that. We had a very high growth rate last year of 3.5%, which is high by European standards. Now we're down to 2%. We're still growing. Employment is still rising. So it is a drag on growth with these tariffs, but it doesn't stop growth. It doesn't cause recession. That's certainly not our forecast.
In terms of interest rates in India, yes, India's central bank has cut 50 basis points in last monetary policy, but overall they have kept the rates steady. And also the expectation is that in months to come, maybe there may be one more cut in near future. How do you see the interest rate trajectory, especially in Asia, versus the scenario which is there in Europe?
So in Denmark, we have a very special setup because our currency is pegged to the euro. So interest rates decision in Denmark is really about following the interest rates in the eurozone. And if you look at that and the market expectations there, they're expected to be more or less flat for the next year or two.
Going forward, we will see there will be a lot of demand in the space of digital lending, who is actually catering to the segments which are either have a limited access to the formal credit ecosystem or completely, untapped geographies, untapped segments. So the initiatives taken by the government and the regulator putting together the technology infusion will ensure that there will be a lot of demands coming forward, and digital lending will definitely, going to play a very, very critical role.
Right. We were speaking about economy now. Reserve Bank of India forecast says 6.8%. There has been several upgrades if you talk about in last 3 to 4 months, and rating agency upgrade has also happened. Do you think we have potential to grow beyond 7%?
I believe credit is going to play a very, very critical role. It fuels economic growth. If you historically see the cross-country, data, there is a very, very, direct and positive relationship between private credit to GDP and the growth of a nation. Having said that, India today stands roughly around 50-52% private credit to GDP ratio. If we expect, India to become, $30 trillion economy from 4 trillion what it stands today. So the credit has to, multiply. It's, it has to triple or maybe quadruple from 50% to more than 150%. So it will enable that the, economy will grow at a very consistent and sustainable level, 6.5% to 7%. And that will actually, in a way level, because a lot of digital public infrastructure have already been, putting in place. We talked about payment. Payment, India is actually, leading the world. More than 50% of the real-time digital payment is being happening in the country. And lending also, there are a couple of, initiatives being going on. RBI recently, launched the unified lending interface, which will democratize the lending as a product, which will be, at the tip of a finger, tips in the mobile of an individual. So that will integrate a lot of, data which are available at different places, but in an isolated manner. So unified lending interface, platform like Jan Samarth, which was recently launched by Ministry of Finance, Department of Financial Services. It's aggregating the different loan products into one common platform, then aggregating the different data sources, like there is a agri stake account aggregator data. So these data are being consolidated in one place so that the institutions have a better credit assessment and underwriting capacity. So going forward, visit lending, payment, I think in a way, enable India to grow at a sustained 6.5 to 7%.
The fintechs are now acknowledging that there is a growth, and they are believing that the second half is going to be better than the first one.
E-commerce is a very priority segment, right? And so far as e-commerce has grown, I think around 61%. If you look at, the first quarter of this year versus the last quarter, same time, last year, same quarter. BFSI is, I think, up around 42%. Cross-border, as I was talking, it's up to 50%, right? So those are segments, as you can see, right? And we have made good progress. And then that growth is way more than what the market is growing at, right? So definitely, that's a sign that, we are growing, and that's why we had, as I said, we had a good quarter, right? And if we continue the performance, we'll have a good year.
And what are the plans for listing?
Listing, yeah, I think, as I said, right now focuses on innovation, being an innovative company, and grab market share. I think listing, when the market is right, I think we always have to be ready for listing, is what I think the experts say. And when the time is right, I think we'll go for it. But right now the focus is on innovation and market share.
One last question before I let you go. When you talk about innovation, how you plan to differentiate yourself from the other companies which are there in the market?
Right, I think there are the basics, which is speed of onboarding, speed of the developer experience, using AI to make sure that your support experience and the payment experience is perfect, right? We don't want merchants to have support tickets when they're using cash free. We won't want the customers of our merchants to have any issues when they're using cash free. So we are very obsessed about these metrics that we track very closely. And then there is the product angle, right? I think I was talking about cross-border payments, both money going out of India, money coming into India. I think there is recurring payments that has really taken off. There is the new ways of authentication, which is the biometric payments, right? All of that we're going to see. So a lot of innovation that is happening, so stay ahead of the innovation curve. Be very obsessed about your operations and the customer experience, and leverage AI and technology to the best advantages, right? So I think that's what matters.
We are by default India's #1 choice for a safe second account for 3 simple reasons. First, the account can be opened in 3 minutes digitally. Second, the account has a 0 balance requirement. And third, it can be used digitally instantly the moment it is set up.
Okay. So you are confident that going ahead in payment bank space, there will be a lot of growth because mindset shift is happening. And what other avenues will be associated with payment bank space?
We personally believe that the opportunity for the safe second account is a 50 million opportunity. So there is a very large room for growth in the urban space. The payment bank model itself started in rural India, selling primary accounts in rural hinterlands, primarily for government benefits. That itself is another very large opportunity. And equally, it has a very large opportunity to power payments of all kinds for businesses and retailers and merchants across the country. So as Digital India grows, payment bank opportunities will keep growing, and that's very evidenced in Airtel Payments Bank's results over the years. As you know, Airtel Payment Bank is profitable, has been profitable for the last 4 years, and if you look at quarterly results over the last 8 quarters, we have shown QOQ and YOY results which are in high double digits over the last 3 years.
In any kind of financial ecosystem, I think if you are working in a financial ecosystem, you will always see an upside and downside.
Right.
It's a time, it's a phase, it will go over. I think every 4 years we see a lending cycle. It was there around, but I think India has done well. It is coming out of it through the help of policymakers and the regulators' interventions. The right steps have been taken. And I think we have emerged strong as a financial backbone of the country, from whether a small financial institutions like NBFCs or a large public sector or a private sector bank. Everybody are coming back, launching many new products to include the lower strata, which is in the far east or a far north or a far south from a financial inclusion agenda. So overall, I see very positive vibes and sentiments in the financial industry.
You are a B2B company, and from that I want to understand that the numbers which has been disclosed by many of the banks have been quite encouraging. We have heard the commentary that on-ground demand has increased.
Yep.
How's your response from the clients per se? Are you getting more orders?
See, fortunately, we work with almost all the financial institutions in the country and across 18 other geographies. What we are seeing is that in certain products, demands are, I think, at a constant level. It has not gone down, but it has not increased drastically, which is largely on the unsecured product side. But if you see a lot of products, like if you see the last quarter, I have seen secured products for any bank, for the longest times, has done much better than the unsecured products. That means there's a shift or a pattern change in terms of the demand.